Alright everybody, so what we're going to be discussing in today's video is basically just conservative entry signals. So basically when you see these certain price action or candlestick signals is basically the sign to give you the green light to actually take the trade. I know a lot of people get confused a lot of the times on when I should get in on the trade and when I should get out of the trade. But to keep things as simple as possible for the sake of this video, when we see these price action signals, these are going to be the signals that tell us, okay, enter sell, or okay, enter your buy position. It's going to be one of the two. Now, we have aggressive and we have conservative entry signals. In this video, we're going to be going over our conservative entry signals. So, with that being said, there's going to be pros and cons for the aggressive type of entry signal, and there's going to be pros and cons for the conservative entry signal. Typically, the cons for the conservative entry signal is going to be that when you actually take the position, since you're waiting for an actual price action signal to print, basically we're looking for the candlestick to give us a signal to take the trade, which will in return give us a lower risk reward ratio because we don't know how big that candlestick is actually going to print. Now, two main things to keep in mind when you actually do take these conservative entry signals, right? First, you have to wait for the candlestick to actually close. You have to wait for the candlestick to actually close itself, because if price is still fluctuating and you assume that the candlestick is going to go that way, that's an assumption and that's you putting your will onto the market. You have to allow price to tell you that, hey, this is your entry signal. This is when you need to be getting into the market. If you do that while price is fluctuating, what can happen a lot of the times is price will give you a false entry signal since the candlestick did not close and potentially go in the opposite direction, and you could have potentially avoided a loss by simply waiting for your entry signal to actually print. Now, the second thing to keep in mind when actually taking these entry signals is that you actually have to wait for the candlestick to close. And by doing that, we don't know how big the candlestick is actually going to be. So there may be times in your trading where you give price time to actually form the candlestick and allow it to close. And what can happen is that the candlestick is actually so large that you may not be able to actually take the position because the risk to reward ratio may be so poor. And that's going to be one of the cons that comes with trading the conservative entry signals. Now, obviously, one of the pros about trading these conservative entry signals is that you're going to have a higher probability entry signal just simply because you're waiting for that price action confirmation to be able to take the position. So if your trade had a 60% chance of winning and had a 60% probability to go in your favor, you may now have a 65% probability of price going into your favor just simply by waiting for these price action signals. So again, the pros is going to be that you're going to have a higher probability entry signal, but the cons are going to be that your risk reward ratio is going to be significantly lower than the entry signals. So with that being said, you're really going to have roughly 4 types of entry signals: your bullish engulfings, your bearish engulfings, your bullish variations, and your bearish variations. So typically with your bullish engulfings or your bullish variations, right, you're going to want to take these positions obviously at an area of support. It's not about the what, more important, it's about the where. You can see random bullish engulfings and bullish variations probably throughout the entire price action chart. But remember, you have to wait for price to get into your entry zone, which typically is going to be a level of support. And then that's when you look for your bullish engulfing or your bullish variation signal to actually buy. Another thing that you can actually look for these bullish engulfings or bullish variations is wait for a break and retest setup. Typically, the bullish engulfings and the bullish variation patterns are going to be patterns that you're going to look for at a previous area of resistance that is now a newfound support level, or at a support level that you're waiting for price action to actually come back down to. And again, the highest probability signal that you're going to be looking for are these bullish engulfings or these bullish variation patterns at an area of support in a bullish trend. Now, for the bearish engulfings and the bearish variation patterns, you're going to want to wait for these patterns at areas of previous resistance on a break and retest of a previous support level that you may be anticipating to hold as a resistance level, or in a bearish trend at a previous area of resistance or a newfound area of resistance. Whenever you think about sell and bearish engulfings and bearish variations, you want to take these trades at resistance. Whenever you think about buys and you're looking at bullish engulfings and bullish variations, you want to take these at support. So with that being said, we're going to go into the actual chart now and look for these examples live. All right, everybody. So we're basically going to be looking for our examples of our bullish engulfings and our bearish engulfings, along with the variation patterns, as the conservative and entry as the conservative entry method and the conservative entry signals. So in this video, I'm not going to be too focused on where you should look to get out of the trade, stop loss placement, etc., etc. We're solely going to be paying attention to the actual signals themselves here and when you should be looking for these signals. So in a situation, this is the S&P 500 index, by the way, in a situation where you've identified major support. Also, I do want to keep in mind that we're not going to be also just kind of like telling you what time frames you should be looking for these signals. Ultimately, whatever time frames your trading time frames are going to be is typically the signals that you want to look for. What these signals tell you is exactly the same information, just on different time frames. So what we're going to be mainly looking for here on the S&P 500 are our bullish engulfings and our bullish variation patterns. So I'm just going to go down to a 30-minute time frame for sake so we could find more examples of these. But again, we're going to be looking for our bullish engulfings at our areas of support. So on the 4-hour time frame, what we can clearly identify here is that this yellow line here is going to be a major area of previous resistance and a major area of support. So let's say I was on my 30-minute time frame, which is my active trading time frame, right? What I'm going to be looking for again is a signal to potentially buy and a signal to potentially sell. So the first example of a bullish variation pattern is going to be right here. This is going to be our example of a bullish variation pattern right off of support. Now with this bullish variation pattern, what we have to actually pay attention to is that we have one candlestick, which is our rejection candlestick, and the second candlestick is going to be our entry signal. So right when this candlestick actually closes is when you want to take your buy position. Now, the thing that you have to pay attention to with the variation patterns is that it does actually have to reject our support range, which this is the candlestick that rejected the support range, and the candlestick that closed after that has to close above the high of the previous candle, which in this situation here, the high of the previous candle is going to be right here. This is the highest high. So that is going to be our criteria for our bullish variation pattern. Is one, we have the rejection of the support range, and two, the candlestick after that, which is typically going to also be a bullish candlestick, has to close above the highest high of the previous candlestick. Now this candlestick can be a bearish candlestick as well, but at that point in time, if it's a bearish candlestick, then it'll just be considered an engulfing candlestick, because a bullish variation pattern is actually going to be composed of 2 or 3 typically bullish candlesticks. Now we have another example of a bullish variation pattern being right here. This bearish candlestick is actually the candlestick that rejected support, and then this candlestick pattern right here is actually going to be our entry signal. Notice how price closed above the highest high of the previous candlestick, being this bullish candlestick here. This second bullish candlestick over here is going to be the candlestick that actually confirms our actual, this candlestick right here is going to be the actual candlestick that actually gives us a signal to then take the buy position. So essentially, after this candlestick closes is when you'd want to place your buy order here, and we can see that both times price actually continued to go up shortly right after that. And again, you should have already seen the video on support and resistance and where you should place your stop loss and where you should place your take profits. But just to give you guys a quick example of the risk to reward ratios that we're looking at here, if you would have taken a buy position here with your stop loss under support and targeted resistance, you would have had potentially a 2-to-1 risk to reward ratio, meaning for every $100 that you risked, you were looking to gain $200 out of this specific move, which typically the risk to reward ratios just simply aren't the best when you compare them to conservative and when you compare them to aggressive entry methods. Now, when it comes down to a bullish or a bearish variation pattern, typically what we're going to do is look for these patterns at our areas of resistance, which if we go over here, we have the 4-hour level, right? That's where typically we're going to identify our major support or our major resistance levels, right? We're going to mark this entire area off because this is an area of resistance here. We're going to go back down into a 30-minute time frame, and we're going to look at this resistance range over here and try and find some examples of a bearish variation on this 30-minute time frame at resistance. So we have one example of a bearish variation right here, where again the concept is exactly the same. The only difference is that we're looking to actually take a sell. So with that being said, the candlestick that is going to be your entry candlestick has to close under the low or under the lowest low of the previous candlestick, which is going to be over here. After you see that, that is going to be your signal to actually take that sell position. The concept literally stays exactly the same. The only thing you're doing is actually flipping it. Now, when we talk about our engulfings, typically this is going to be a 2 candlestick formation pattern as well, because the candlestick has to engulf the previous candlestick. Now, it has to engulf the opposite candlestick that is actually forming the signal. So if you're looking for a bearish engulfing, price has to engulf a bullish candlestick. So in this situation here, price actually has to close under the lowest low of the previous bullish candlestick, and after this bearish candlestick close is when you would want to take your sell position, which essentially this is the entry candlestick right here. That is going to be your bearish engulfing. Now we could find a bunch of different examples of a bearish engulfing. That is going to be an example of a high probability bearish engulfing because it closed under the lowest low of the previous candlestick. An example of a medium probability bearish candlestick would be this bearish candlestick here. Notice on how this bearish candlestick price just continues to go down straight away after the entry, but on a medium probability candlestick, which is this bearish engulfing candlestick here, price pulled back and then continued to go in the direction of your entry. This is because price closed under, or price failed to close under the lowest low of the previous bullish candlestick, being this candlestick here. So we have our medium and our high probability entry signals. When an entry signal does not close under the lowest low or close above the highest high, that is going to make it a medium probability. You could still take the entry, but again, it's just not as high of a probability as the previous entry signals, which close above the highest high or close under the lowest low. So that is going to be an example of a bearish engulfing. This is going to be another example here of a bearish variation, and these are all areas, these are all forming at an area of resistance, which is more important. Again, you want to look for these entry candlesticks at these areas of resistance. And then here you have another example of a high probability bearish engulfing candlestick pattern, which did close under the lowest low of the previous candlestick, being this bullish candlestick right here. And if we were to continue this, we now have another entry signal over here, being a bearish engulfing candlestick right here, which it did close under the lowest low of the previous candlestick. And then shortly after that, you have another example of a bearish variation. But then keep in mind, if you were to wait for this bearish variation, you could have taken the entry signal after this engulfing, or you could have taken the entry signal after this variation pattern. But keep in mind, your entry would have been here on an engulfing and down here on a variation, where if you would have taken just a simple rejection, your entry could have potentially been up here. So again, pros and cons. Now, again, I don't want to drag this video along because all we're simply doing is looking for the pattern. But again, here we have a major area of support right here, right? This white line is going to be support. Notice price closed back above support and then price closed above here. Although this may look like a bullish variation pattern, it is not our entry signal because we're waiting for price to close above the highest high of the previous candlestick, which this candlestick did not do so. This is a medium engulf, or this is a medium probability bullish engulfing candlestick signal. Remember, our most desired entry signal is going to be a high probability entry signal. So although yes, you could have taken the position on a buy right after price closed here, if you were to wait for more confirmation being an engulfing or a high probability bullish variation, then essentially we have to wait for price to close above the highest high of the previous candle. So this could have been your signal to potentially buy, and if you didn't take that buy and you're waiting for price to close above the highest high, then your signal to buy would have been here. Why? Because this is the highest high of the previous candlestick. Notice this candlestick did not close above. Now this is the highest high of the previous candlestick. Notice that this candlestick did not close above. Same thing goes over here. Now, although this candlestick did close above the highest high of the previous candlestick, which is pretty much this doji right here, it's not the best candlestick to actually enter a position on because you'd want to wait for the break of the highs, essentially, which this candlestick would have been your entry candlestick pattern right here, which it did close above the highest highs. Notice once price actually did that, consolidated for a bit, but then continued to actually go up and make new highs. So when it comes down to a bullish engulfing candlestick pattern, the concept stays exactly the same, right? We have a nice bullish engulfing candlestick pattern, which price did close above the high of, or the highest high of the previous candlestick here. So it's going to be a bullish engulfing, and then you have a bullish variation pattern right here, right off of this major area of support, as you can see. Now, if we look at other examples of bullish engulfings, you have a great example right here of a bullish engulfing, where notice price just completely closed bullish, and it closed above the highest high of the previous candlestick. So those are going to be examples of bullish engulfings, bullish variations, bullish or bearish engulfings as well. Then here's another example of a bullish engulfing where we had price close above the highest high of the previous candlestick. Now, those are going to be the examples of the bullish and bearish entry signals on a conservative method. In the next video, we're going to be talking about more of an aggressive method, and then in the video after that, we're basically going to be breaking down the pros and cons in terms of risk to reward, and then you can look to identify which setup you want to allocate a conservative entry method to, or which setup you want to allocate an aggressive entry method to.